Alright, good morning. Let's go over today's trade plan. So in the overnight session, we saw some weakness in the market where we got a pullback towards yesterday's low, 36.5, and buyers were active right ahead of that. And so far, we've just been balancing near yesterday's low. We'll be using the 37.75 to 39.75 as the micro bull bear zone. That will help us establish the very short-term directional bias right off the open. And the overall bias is going to remain bullish above 28.5. So the bigger picture bias remains bullish above 28.5, and short term, we'd like to see ES get above 37.75 to 39.75 to indicate that the strength that we saw yesterday could still be in play. And then yesterday's low at 36.5 is a pretty key level as well. We want ES to hold above that level, and it's okay if we poke below it by a couple of ticks and then rotate right back up, but you definitely don't want ES holding below 36.5. That would be a warning sign for buyers. Below that, we do have a support level at 34.5, and then initial support 31 to 33. We have the open gap at 33, naked VPOC 33.25, and that's still a spot where responsive buyers can enter the market because the bigger picture bias is still going to be bullish above 28.5. So, as long as ES holds 31 to 33, we can still get a move back up towards the 41.5 to 43 area, and then potentially, go up and test the all-time highs. And if we don't really pull back much, which is the ideal situation for buyers, is that we don't really get a deep pullback, that we maybe either hold above 36.5 or poke below it for a little bit and then shoot right back up. In that case, we could quite easily go up and test 45.75 to 47.75, and the other markets have already made all-time highs, or at least new highs on the year with NQ, an all-time high on TF. So with the other markets being as bullish as they are, ES can quite easily move back up towards the 45.75 to 47.75, and it doesn't have to stop there. We can get some profit taking at that zone, and that can result in some, short-term rotation. But the way this market is set up, bigger picture, we can quite easily push higher and go up towards the 51.75 to 53.75 zone. So really, at this point, our focus is still going to be more on the long setups. Given the way this market is set up and how bullish it's been, we definitely don't want to take aggressive shorts at lower prices where buyers can pretty much step in at any point and reverse this and push it back up towards yesterday's highs, towards the gap fill and 43 area. So right now it's basically, we either, buy the dips into support. That pullback towards 36.5 was a good spot from a reward to risk perspective because, we can get a move back up towards the gap and naked VPOC. So, at least, you have decent reward to risk at that point. So at this point, we're still going to focus on the long setups, and really, unless 31 to 33 breaks, that's really going to be the bigger warning sign for us, and then we'll reassess and we'll be cautious on the long side, and perhaps if there's enough volume in the market and we feel that there can be a wider range, then we might look into the short side. But for now, the way the market is shaping up, I think that shorts are still going to be risky. It doesn't mean that they can't work. It's just that, the odds of them working with the right reward to risk, those are just low. It's, there's a higher probability that buyers are going to step in on any break into support, as opposed to, sellers really pressing and, liquidating the buyers below 31 to 33. The main catalyst today is the Philly Fed survey, 9 a.m. Central. So, that can also lead to just kind of some continued balance in a range, or, maybe we poke below 36.5, maybe stop out some people, and then start balancing back within the overnight range, something along those lines. Um, but once the Philly Fed survey is out, then we should be able to get some sustained directional movement, and ideally that movement is a continuation move to the upside, and we go up and test the all-time high, and then ideally we break above that. At least we set a new all-time high today. So those are really the main ideas. Let's see how well we hold up off the open. The first 30 minutes can be a bit two-sided. So if you're taking a trade and you're getting 2 times your risk, might be a good idea just to take the entire position off ahead of the Philly Fed, and then reassess once the news is out of the way, and then look for the next setup. So those are really the main ideas. Let's see how well we hold up, and we'll take it from there.